think we're live now.
Yes, we are live and it's 20 seconds in.
All right, so let's go. Hello and welcome, everybody. Thanks a lot for joining us on this Sunday for our September and October webinar. And this time, as we will be talking about the festive demand and pickup in consumption, right? So, that do
Yes.
we have questions here already?
Yes, we have few questions. Also, I'll be looking at the chat box to answer any questions during the live Q&A session.
Okay, so will you give me a maybe we can start with a small brief on what are the type of questions that are coming?
Right. So the larger question that we have is in terms of the strategy change, given the change in the market sentiment post the GST cut and all of that.
Yeah,
What kind of strategy changes are we doing? If you can talk a little bit about that. Then the other questions is on any new products that or strategies that are lined up. So if you can delve into that as well.
definitely. So I'll talk about all of that. Thanks a lot for this, and I'll just maybe quickly. I have a presentation here. I think as people can see, the agenda of this session was talking about the consumption shift, right? Pickup in consumption and
Correct.
consumption being the biggest theme. And I've got a very interesting presentation. I think in the last live also we talked about consumption a lot, but this time we've got much more interesting data, right? And what a lot of indicators, if you look at in the Indian economy right now, there's a lot of hint that is coming and a lot of conviction that is building that the consumption linked sectors and credit growth, right, those type of sectors will be where you will see the next set of winners, right? And there's a lot of data that is justifying that, and that is what we're going to do. We're going to look at that data and sort of cut through the noise and give you the signal that is coming about the pickup in consumption, especially in the run up to the festive season, right? So uh, so the theme of this particular session is festive demand actually gaining momentum, and how do we start betting for the next quarter, where will we see high growth or where will we see the sectoral shift happen, right? So that is what the focus of this particular session is. We'll start by talking about the consumption pickup. The first thing that we've seen is a significant sort of a run up in the consumption sector, in auto sector, after the 15th of August announcements about the GST cut rate. So the GST 2.0 reforms, after they came out, you can see that auto sector, which has been an underperformer for a while, actually picked up, right? Had seen a strong pickup, right? So that has been, I think, a great tailwind in the consumption theme. Second thing that you would see is that even on the credit side, right? So one aspect of it is your consumer demand. So we've seen a pickup in autos, a pickup in different consumer discretionary consumer staples, but also on the loan growth, right? So you can see that a lot of analysts are projecting that retail and wholesale loan growth rate will actually accelerate going forward. They have sort of bottomed out, and powerful consumption will lead to strong loan growth also. That's also a strong signal that is coming out. And there are a lot of reasons why people expect this consumption led growth. Obviously, you cannot talk about 100% surety, or you cannot predict these things, but we think that there is a strong signal that is coming out, and there are various factors that hint at it. Number one, the fiscal and regulatory stimulus, the GST cut, that came right at the time of the Navratri festival, right? And the boost to private consumption and all that has come through that is one of the signals. Second is your monetary policies. We saw the RBI governor did not cut rates this time, but they actually had a very dovish policy, right, where they talked about future rate cuts. And the CRR cuts are actually accelerating the credit growth in the retail side. There is a strong NBFC and auto trend, right? Similarly, This is supportive liquidity in the market also. Third thing that we see is the consumer sentiment. So you will see that inflation has cooled down, and inflation has cooled down more in rural areas. Plus, you can see that wage growth, right? And agriculture output. So monsoons have been quite exceptional this year. You can see kharif sowing has been faster. Rural wages have increased, right? So that is a boost in consumer confidence. Plus urban confidence, right? Even you're seeing an uptick in urban sentiment, and you're seeing an uptick in government as well as private capex, which are all positive signals. And finally, we see that various sectors, right? For example, auto is seeing a surge. You're seeing luxury spending actually be very robust. You can see property registrations in Mumbai and stuff like that have a positive signal. You can see uh, these fast tag rates, they have done quite well. Similarly, I think the festive demand is coming up. And the timing of the GST cut is right before Navratri, so that will boost. And I think there has been deferment, right? So people did not spend in Q2, but they are going to spend in Q3 because rate cuts have come lower. So that boost will come in Q3. So there are a lot of positive signals that hint at these particular sectors, right? So first thing we'll talk about in this presentation, is the festive demand pickup, right? You can see that there is, so festive demand, festival season has already started. Navratri has come, and Diwali is going to come in another 20 days, right? You will see that if you look at a lot of these consumer companies, right? Results are going to come up very soon for these companies. You'll see that this quarter again, has been slightly weak or sluggish growth, and this is primarily because GST gate announcements are announced, but they did not come, right? The rate cut had not come in Q2, so people delayed a lot of their spending, and this 5 year of sales impact will shift from Q2 to Q3, and that will lead to boost in volumes in the next quarter, right? So that is something that people are anticipating, and a lot of these retail companies will see further growth in the coming quarter, right? uh, Similarly, let's talk about auto sales. You can see, auto sales have also seen that delay in spending, but there's a significant uptick that is happening in interest for autos, private vehicles, consumer vehicles, two wheelers, etc. Right? So you're seeing strong signals there. And if you talk to auto dealers, they are expecting 20 to 25% growth during the entire festive season. So year on year. So they're seeing that this festive season will be 20 to 25% better than the last festive season. What you also see is that whenever the auto sales grow, the auto loan also grows, right? So the second theme of this presentation, which is growth in credit, would also see a boost as the auto sales pick up. The strong probability that sales will pick up in this quarter Q3. Plus, you will see loans also pick up along with that. Finally, the financial engine, which is the credit policy backing the consumer spending, that is also very robust. You will see liquidity in the system is very supportive. The net interest margins have bottomed out. So this time, the last quarter's earning might not be very attractive when they come out, because net interest margins will be subdued. You will see credit growth subdued, but all of that is sort of bottoming out, and people expect that demand growth to actually pick up strongly. Liquidity growth, growth of credit to actually accelerate in Q3. So those will be some of the things that will be very strong in the coming quarters. And if you look at the data here, you'll see, your gold financiers, they will continue to show very strong numbers driven by, growth in gold prices. But along with that, the festive purchases will boost spending for consumer durables, vehicles, and that will, also bring up the credit requirements. So the festive season is also going to be a significant boost for the consumer segment. Now, the second thing that I want to talk about is the GST, right? So, with the GST rates, there has been this is the biggest driver, right? So, the biggest driver here is if you look at it, we have data here for some of the key segments. You'll see food portfolio and staples, right? They have seen rate cuts from 12% to 5%. If you look at mass market beverages and snacks, they have gone from 18% to 5%. Similarly, high penetration personal care, they have all gone down from 18% to 5%. And right before Navratri, which is strategic by the policymakers, you see trade channels will start getting higher demand as these rates have come down. So one of the biggest drivers, like we discussed, is the GST 2.0, which makes us bet on the consumption pickup. We have data here of FMCG affordability, right? So you will see that various companies like Britannia, 95% of the total sales includes biscuits, cakes, and value-added dairy products, and they will see reduction in GST rates. Similarly, Colgate, 95% of the basket will see reduction. Imami with Chyawanprash, honey, etc., will see 85% reduction. 85 of the basket gets reduced GST rates, right? Similarly, Bajaj Consumer, Dabur. So you will see that the food portfolio is seeing um, a significant reduction in the whole basket in terms of GST rates, and that will lead to a much favorable environment for mass market consumption, right? So you can see that with the GST rates coming down from between 7% to 13% for each of these products, each of these baskets, there will be a significant boost to mass market consumption due to these reforms, right? And which is what the effect of which is what we anticipate to see in the coming quarter. Similarly, you will see that your auto sales, durables, and infra. So it's not just about this boost is not just about your food basket or discretionary spending basket, but also about autos, consumer durables, and infrastructure. So if you look at so this is very interesting slide from, I think, Philip, where you would see that these are Google trends, right? So you will see the trend of the top four wheelers like Brezza, Nexon, and all of these cars. You'll see that there's an uptick in the Google trends. Similarly, if you look at four wheelers, which are mid-tier SUVs, there's significant uptick that you can see, for example, in Vitara and Harrier. You'll see very good uptick happening after these announcements. Similarly, two-wheelers like Royal Enfield, Activa, they're seeing an uptick in trends. Similarly, durables, even you can see washing machine is seeing a tick. AC is not seeing a tick because there's been ample monsoon which is still going on. But you can see other products like washing machine, mixer, stuff like that getting a significant uptick in volumes, right? And there's been rate cuts in two wheelers that have seen reduced from high 28-31 basket to 18%. Tractors have come from 12 to 5%. And even key items like room AC, dishwashers have come from 28 to 18%. And TV sales is something people anticipate should grow up. Even cement, right? Cement, wires, so materials used in consumer durables, they are going to see, first of all, rate cuts. Plus, the building material is also anticipated to see a lot of fast growth. So you can see even in the last quarter, cement did extremely well, and that is what we expect in this quarter also. Now let's look at it from another angle, which is rural versus urban demand changes, right? So I think in the last presentation that we did, we were talking a lot about rural being extremely good, right? And a lot of consumption growth coming from the rural side. So let's look at what the data looks like right now on that, right? So first thing that you will see is obviously rural demand is doing quite well. You can see the rural wage growth has been 6% YOY, right? So which means that rural wage growth has been quite robust. Second thing, you will see that monsoons have been, quite above average in most of the country, and even kharif crop, right? So here I have data for how much kharif sowing has been done. You will see that right now it is 3% higher than last year. 2024 was much lower, as you can see, and we are already doing with, even in the end of August, we were pretty much in line with the normal area, right? So kharif sowing has been very robust, which will lead to higher agriculture output and higher consumption growth from the rural segment in the coming quarter, right? So that makes this theme a very interesting thing to bet on. Now I have data on inflation here. You'll see, inflation definitely is at a massive low. See, from June 2021 to now, it's never been this low. And rural inflation is actually lower in comparison to urban. So urban has also come down, but rural is actually even lower compared to urban, which means that now the rural segment will have money not only to spend on the mass market product, but also discretionary spending. So things like autos, or things like discretionary products, white goods, etc., they might be more in demand from the rural sector as well. That's a significant positive signal that hints at that, right? So that's another signal that we see coming out from this. But we talked about rural, but even on the urban side, right? So urban demand has lagged and has actually been a little bit subdued over the past couple of quarters, primarily because of what's happening with the global scenario and the fear of global growth slowdown, etc. But if you look at consumer sentiment in the economy right now, you would see that the sentiment has actually picked up, and future expectations by the consumers, you can see this uptick. And when that happens, this means that there would be higher urban spending also. So there is an upbeat sentiment that is coming in the urban markets as well. And this is primarily driven by, number one, your GST alterations, right? So your AC, TV, dishwashers are seeing a rate cut in terms of GST, which will give a significant boost to urban spending, and a lot of people use the festive season to make their significant discretionary spends, which we will be seeing happen in this quarter. Secondly, even on luxury items, if you see real estate spending, there's been a significant uptick, like we discussed. So I think the urban demand is also expected to pick up, and those are the sectors that you have to watch out for. Now let's talk about, talking about this sentiment. Let's try to analyze the sentiment in the broader economy as well, right? In terms of consumption. So when we talk about consumption, the one of the first thing that you want to see is the credit growth cycle, right? So consumption is fueled by savings as well as credit, right? And a lot of brokers, a lot of analysts right now are projecting that the credit growth rate has actually bottomed out. The net interest margins for various NBFCs and banks have bottomed out, and Q3 will be the time when you see a uptick start to happen, and you see credit growth start to pick up. So the projections are stronger for credit growth in the upcoming quarter, right? And even the rate cuts that RBI has announced are not yet fully transmitted in the economy. You can see NBFCs have maybe transmitted them more than some of the banks, and therefore you're seeing higher growth happen in the NBFC sector. CRR cuts have been announced, right? Which will also penetrate through the system and boost liquidity, which will be beneficial for the credit growth. Another thing that you will see is that, like we said, net interest margins are bottoming out. Growth is Asset quality is pretty robust. So some analysts are worried that, okay, credit growth uh, is slightly low, and asset quality might be a worry. But if you look at look at the credit quality, there's no significant worry that you can see in that area right now. And the NIMs are at the lowest, the net interest margin at the lowest, but repricing of term deposits and full effect of CRR cuts are expected to give you a higher growth rate across banks, which is something that you might see in the upcoming quarter, right? Finally, capex, right? So government is also doing a lot of capex, right? If you look at this year's YTD, right, we are already higher than your previous year, right? And your budgetary allocation, we have crossed 38%, which is quite good, right? So the capex spending has been robust. Therefore, there is focus that is there on the capex linked stock as well, right? So it's not just about consumption. Capex linked stock are also seeing significant uptick, right? Your consumer sentiment, like we saw, is very strong, which is a strong signal. But also, if you look at other signals like the power demand, right, and power generation, you can see that uptick is happening around there as well. So that is also a strong signal for an uptick in power demand. So these things sort of give us a hint that the consumer sentiment is getting positive, and that is being boosted by the credit growth as well as the government capex. Now, let's finally talk about, we've given you a thesis on why do we think consumer sectors and consumption demand might be strong, but let's try to talk about where do we invest in the upcoming quarter, right? So October to December quarter, this quarter, which is primarily a festive sort of a quarter, where do you see investment going to happen, and why do we think that momentum is going to come back, right? So we think that Q3 will be, after Q2, which has seen some worries. Q3 will be the period of momentum, and momentum will come through some strategic sectors, right? So which will be the strategic sectors that will drive momentum growth, right? So we think primarily the revival that we expect in Q3 will be driven by, first of all, a little bit of delay in spending. So in Q2, the disruption happened, because the announcement came early and rate cuts late in GST. Some of the spending is delayed, so some growth will come through that. Second, you see the capex support is one of the things that is boosting, that will boost the consumption revival. Thirdly, credit acceleration, financial sector will be a significant boost here, and then finally your consumption and fiscal stimulus, right? So GST 2.0 would be one of the primary reasons why we see a consumption revival. So there are 4 or 5 reasons that make us bet on discretionary as well as staple consumption, and these are the primary reasons why we expect, you know to bet on these particular sectors, right? Now, we talked about, when the earnings come out this quarter, you will see that maybe the NIMs are low, the numbers are not that significant for banks, but going forward, the expectation of credit growth or the net interest margin here would be higher, right? And we would be one of the triggers which will maybe attract attention in the financial segment as well. Now, in terms of where do we invest, right? So this is an interesting slide where I put in the growth rate expectations of different consumer sectors in the run up to Q3, right? So you will see that people expect festive auto demand to be more than 25%, automobile revenues to actually be more than 15%. You will see that private vehicles, people expect private vehicle two-wheelers volume growth might be slightly lower. Tractors will be robust, and FMCG revenue, people expect that to be pretty robust. Retail revenue is something that people are betting on a lot. So you look at companies like Trend, Shoppers Stop, etc. There's a lot of interest there. QSR is another segment that is seeing some revival. So there's a lot of interest in QSR right now. Consumer durables, luxury goods, etc. So those are also fit to see a stronger demand. So these are the areas where we expect you will see strong demand. So primarily autos, FMCGs, retail, QSR, and consumer durables and luxury goods. That's where you would see a breadth of demand. Secondly, on the credit cycle acceleration side, right? So people expect retail loan growth to be higher, aggregate loan growth to be higher, right? Gold loan advances have already been pretty robust. Affordable housing will have a very good number, and then NBFC's profit growth are also expected to be robust. So we are betting not just on the consumption basket, but also on the loan growth in the economy in the upcoming quarters, right? Along with it, like we said, capex has been strong, so you will have to keep an eye on capex and infrastructure like linked sectors as well. So that is where we think that the next quarter will present a lot of interesting opportunities, and this is our whole thesis why we expect the next quarter to bring back momentum, primarily led by consumption. So that is all I had to present, Siddharth. Maybe we can go over to the audience Q&A next, right?
Sure, we can do that. I'll start with the first question. How sensitive is the portfolio positioning in regard to rural demand recovery? Are you tilting towards rural facing names given the better rainfall data? And if you could talk a little bit about the portfolios that actually get affected by the rural demand in terms of the strategies that we have specifically.
Right. So, are we live, Siddharth? Are you checking on YouTube?
Yes. Yes, we are live.
You checked on YouTube?
Yes, I checked on YouTube as well.
Okay. I was just looking at it. Fine. So the question was, no, we're not live, Siddharth. Just check it.
No, I can see it on YouTube. We are live. It's open for me on another browser.
Ah, wait. Okay, we're live. Sorry for the disruption. I got confused. Okay, so your question was that portfolio positioning, right? So that's a very
Right.
interesting question. See, we have bet a lot on the rural growth primarily through a couple of sectors, right? One is your agrochemicals, right, which is linked to your monsoons and which is linked to uh, that is one of the primary reasons where you see growth, right, when there's a rural demand pickup. So we bet on that. We've also have the allocation in some of the retail stocks, right, which are primarily linked in the tier 2, tier 3 sectors, right? So that is a second bet, and we've also incrementally added a lot of auto exposure, right? So right now we have a significant sort of a auto exposure.
Mhm.
So we are betting on that through three lenses. But yeah, we've seen incrementally our exposure to agrochemicals is actually reduced, right? So we have bet on that, but we have reduced a little bit on the agrochem.
Got it. Given the high growth outlook in, say, autos, retail, and durables, what risks or valuation concerns would you be cautious about in the next 6 to 12 months?
Yeah, that's a very interesting thing, right? So I did not include those charts, but if you look at, for example, maybe I'll just pull it up on my screen, right? So let's say we're looking at the consumption basket versus the Nifty right now. I'll just pull up it on my screen. You will see that this sector is undervalued, right? So I have Nifty consumption versus the Nifty. Look at the longer term, it is quite undervalued, right? It has not grown as much as the broader, it has underperformed, right? So in terms of valuations, those numbers are not that high. Even if you look at autos, right, we've seen an uptick happen in the last few weeks in the auto stocks, but still, in the longer scheme of things, that sector is quite undervalued compared to the broader market, right? No, not autos are not, seems. But I mean, in the longer term, definitely, like even if you look at the past few quarters, it's undervalued. So it's not. I think there's still a lot of numbers that is going to come. So we don't think that the growth is fully priced in yet, right?
Right. So just a follow-up question to that. So do you expect, mid caps and small caps to continue outperforming, given the consumer sentiment is holding up?
Hmm. See, I think, yeah, that's an interesting question. See, definitely, I expect mid cap and small caps to do strongly, and it would be sector specific, right? It won't be like every small and mid cap would do well. For example, we might see some of the agrochems lose, or some of the chemical names lose some steam, that have been doing extremely well. You might see autos pick up, you might see cement do robustly, you might see credit growth and stuff like that do well, and the consumption theme that we're betting on. So it will be sector and stock specific, but we do expect small and mid caps to do strongly, right?
Right. Now, talking a little bit about the momentum in the market, which we've not seen in the past few quarters at least. So, what's your
Mm.
opinion on that? Given few of our strategies are momentum focused. When do we see this momentum coming in? And some viewpoints for the investors who have already invested in such strategies with us.
See, I think momentum has been quite tricky, right? I again maybe share my screen and show you on the charts, right? So let's look at this one, which is your Nifty momentum, right? It looks like, there's a long runway, right? Nifty has been at the similar level, but momentum has been yet to recover from, right? And that is a challenge. I think and this is a function of the changing dynamics in the market, right? You can see there are a lot of pessimism that is already built in. Look at our currency, look at our a lot of numbers where you're seeing pessimism being built up, but there's a, like I said, forward looking estimate, especially from Q3, is quite strong, right? You're going significant policy change that will lead to consumption growth. There's significant policy change that will lead to credit growth. Capex is strong. Similarly, I think I think there is a little bit of a so I think we see the things getting better in the so the
There's some network lag that we are experiencing. So, we'll just wait for Sonam to join in back.
Hello, Siddharth.
Yes,
I'm so sorry, my laptop sort of switched off. So
no problem.
maybe we'll quickly wrap it up. I think people might be a little bit confused what's happening, right?
Right. I think given the network lag today, we can wrap this up for now. But however, if there's any questions that we happen to miss in the chat, please send us an email. I will ensure the team reaches out to you explicitly with all the answers to your questions, whether it's about your small case holdings, your PMS holdings. Um, just some last closing notes from your side, Sonam.
No, no, I think we can take a few questions. I don't have a network problem, but I can talk, take a few quick questions if there are some.
Right. Right. So just circling back to the question that we were discussing upon, was in regard to the momentum in the market.
Hmm.
Given that most of our strategies are tilted a little bit towards momentum, how do you foresee the momentum picking up? And what would you advise to investors who have already invested in such strategies?
See, definitely, like we were saying, that it's been a little bit painful, right? The momentum has been, we've been seeing the momentum be a little bit weak, right? Especially this year, momentum has not done that well, and that has led to discouragement in investor confidence and all that. But I think the equation is very simple. India is one of the highest growing economies in the market. Our growth rate is projected to be 6.8% highest in the world. You're seeing significant policy shift that is going to boost some key segments like consumption, infrastructure, capex, credit growth that we talked about. And I think we will see that recovery come back in a very emphatic way pretty soon. And when that happens, I think momentum strategies will get back their long term growth rate, right? So the long term growth rate hasn't picked up, right? And things like these happen. We've done analysis, and this is nothing unique, right? This is not the worst case. This is something that has actually happened multiple times in history. And I expect momentum to come back. And like we discussed in this whole session, that upcoming quarter or two is when we see that significant growth come back in the economy.
Right. So in the meantime, by the time momentum picks up in the market and the economy, are there any fundamental changes that we are doing to strategies, say like alpha or the momentum strategy itself?
See, I think it is tricky, right? See, for example, our alpha has a great set of stocks, but it can be slightly volatile, especially in times when markets are shifting, right? So you've seen consumption basket do really well, but then you've seen past week some correction happen in that segment, right? Which can impact strategies like alpha. But yeah, I think thematically we are pretty allocated to domestic linked stocks, especially in the infra as well as consumption space. We have bets in autos, we have bets in cement, we have bets diversified across the board. I think the strategy will have its time in the sun. And we suspect, right? The data tells us that the signal is coming that that growth might come through consumption and all in the coming quarters.
Right. Another question from YouTube Live. Why are we making different kinds of investment strategies and asking investors to choose from? Say, for example, in the mutual fund space, there's a flexi cap strategy that they could, the strategy itself decides and the fund manager decides. So, why do we have these options for investors to choose from?
Also, we do have dedicated strategies. For example, you can go with our momentum strategy, or let's say our factor strategy, right? Which are one stop solutions. But we also have a few thematics, right? For example, we have the new India thematic basket, we have the innovation in thematic basket, which is done quite well. We also have one consumption basket that is coming up. I think around Diwali there will be a lot of noise around it. But so we do have some thematic baskets where for people who want the thematic experience. You also see that mutual funds have a number of thematic portfolios, right? Suitable for certain market scenarios. So that is we have done. But Otherwise, many of our products are one stop sort of products, right?
Right. Another question. Given the recent announcement by RBI where there was no rate cut at the moment, do you think if liquidity remains surplus, RBI will remain accommodative, or are we nearing a phase of gradual tightening as well?
No, no. I think RBI might not have cut the rates, but it was very uh, dovish, right? They said that they will cut rates in the future. They said that they're going to help growth, right? So while the announcement of rate cut might have not come in October, it will come soon, and I think the RBI stance is definitely dovish and pro growth, and that is why the market also reacted very positively after the announcements. Right? It was the rate cut didn't happen, but the market has been quite positive, and that is because the narrative is very dovish. So I think RBI is not going to cut these rates, not going to raise rates, but it might cut soon, right? That is what the anticipation is.
Right, right. Perfect. Another quick question on sectors. Can you name two sectors in our strategy that are overweight and two sectors that are currently underweight?
So we do have a slight overweight on maybe these commercial like segments only, right? So for example, we have weights in autos and auto ancillaries. We have I think a decent weightage in let's say cements. It's primarily consumption and infrared segments. In terms of sectors where we don't have a lot of weight, I think we have a very small weight in IT, right? Only one or two stocks. We do expect IT to do well when the data comes out supporting that, but right now, it's very mixed and pessimistic, especially after the H1B announcements. Um, Also, underweight, so we do not have a lot of banking exposure as of yet. The growth has been muted in that sense, but I think as the credit demand grows up, we might see more NBFC and banking exposure.
Right. Right. Perfect. So I think we've answered, most of the questions that were there on top of the funnel for now. Some ending notes from your side will be very helpful at the moment.
No, definitely. I think thanks a lot, everybody, for attending. We did try to get you a lot of information and data to support the hypothesis that momentum is going to come back, and especially through the consumption-led stocks, and we'll see that play out in the coming 3 months. Um I'm sorry for all the disruptions that happened this time. But we are very excited about the prospects from the market, and we have these interesting strategies on Smallcase and in our PMS that I'll encourage you guys to go and explore. Do reach out to our team for any questions, queries, any data point analysis that you might need from us. And I wish you guys a very happy festive season, and we'll see you soon.
Yes. Thank you for that, Sonam, and thank you everybody for taking out the time to join us on a Sunday morning. We are in the world of technicals, hence technical hiccups keep happening, but you guys have been patient. But just in case we missed out on any specific questions, I would request you again to send it across to the team via email, and we will ensure that we reach out to you. Thank you, everybody. Have a great weekend.
Thank you.